What's going on, everybody? Nate Hare, Director of Sales for NuView Trust Company. Today is another Wednesday, so we have our Wednesday workshop, and I've got a very special guest with me. Can't emphasize enough on the very. I've known this man, but for almost 10 years now, very close with him, and I consider him to be one of the top-notch educators when it comes to investing in alternative assets, specifically with investing in apartments. So we're so thrilled to have Brad Sumrock on with us, and we're going to get into a rolling start and really just jump right into it and talk about successful apartment investing in the post-pandemic world. Very important stuff on how to look at the trends and look at what's going on in our marketplace, especially when it comes to investing in multifamily and specifically apartments. So let's just jump right into it. Before I invite our guest in here in a sec, always remind people, if you're new to this, NuView Trust Company, we're a self-directed IRA company based right in the heart of Florida. We service clients all over the nation, however. We've been in business since 2003. We've got 11,000 clients and almost $2 billion under management currently. And the management of the assets that we hold are alternative assets. So we have clients all over the country that use their retirement accounts, old 401ks, old 403bs, TRS plans, IRAs, ESAs, HSAs, all of these tax advantaged accounts that people have money sitting in. And we basically teach people how you can invest in things outside of the stock market. So invest in things like real estate, apartments, which we're talking about today, and how that might change your life when it comes to your retirement assets and how soon you get to retire, by just understanding that you have a lot of options when it comes to your retirement assets and what you hold within that. Another key thing with retirement accounts too is the other side of retirement accounts that we often don't speak about enough, but it's if you are a investor, specifically investors that are raising money through syndication and looking for buckets of money to help provide capital sources for you to go out and buy apartment buildings. One of the greatest sources of private capital out there that's very underutilized, I would say, is retirement accounts. There's well over $30 trillion in retirement accounts currently. It's the largest source of Americans' wealth. 10 trillion of that is in IRAs alone, which are the largest source of American retirement. Yet 98% of those funds are invested in traditional investments like stocks, bonds, mutual funds, and CDs. So providing this education from NuView is key to us because we want to help educate clients, because educated clients become better investor clients for us. And we like to have very special guests who have expertise in certain markets. And we've definitely got that individual on today who's going to talk about investing in apartments in a post-pandemic arena. So Brad Sumrock, are you with us? Can you share your screen and share your lovely voice with us?
Hey, everybody, I'm here.
There you are.
My video, and thank you, Nate. It's nice to reconnect with you again.
Definitely nice to reconnect. Let me say a couple things real quick, and then I'll let Brad take it away. I've known Brad since I think 2012 around, so almost 10 years. Go back a long way. I've been at his events. I've worked with his students. We've had mutual clients. I can never endorse anybody, and everybody understands that working at a self-directed IRA company. But I will tell you this, and this is just true fact, is that the investor clients, the students that go through Brad Sumrock's courses, often are some of the most educated when it comes to investing in apartments, putting good deals together on both sides of the equation, finding deals, participating in deals passively. There's just a lot of opportunity through Brad's education and his IQ, his smarts, and his experience in this space that has made so many people money over the years, that you've made life-changing events all over the country. And I've seen it firsthand. So thank you, my friend, for joining us today. And go ahead and take it away, Brad. Let's share some stuff on what you're seeing out there in the market.
Yeah, this is an exciting time, and thank you, Nate, for that very kind non-endorsement. I really, it was great. It was great, and I do want to endorse Nate. By the way, I've known him, like you said, almost 10 years, and I've worked a lot with NuView, and they're a great company for people that have retirement accounts that want to self-direct their retirement accounts into unconventional assets. And apartments are just one of the many unconventional, meaning non-stock market, non-traditional equities and bonds and stuff like that, that you could invest in. And I don't know if you know, but I actually have a retirement account from my 17 years of corporate America that I use to invest passively in apartment deals. So yeah, so if that's something that that you have questions about, you could ask me about the apartment investments, and you could ask NuView about how you can get your retirement account money invested into assets like apartment buildings, for example.
Yeah, it's really a perfect combination. We tell you how to do it in your IRA, and Brad tells you, you know, the ins and outs of buying apartments. So it's a great combination.
Yeah. So that's why I'm here. And I guess I'm just going to start with, and we have some participation. So if y'all want to participate, it'll be more fun and it'll be more engaging. But how many of you, and if you could just put in the chat or give me a thumbs up in the chat or whatever, how many of you, is there anybody that's currently investing in apartments? So let's see if anybody there has, okay, I see someone said no. So that's good. So there's an opportunity for you to do it. And Rick is saying yes. And I just want to share, Nate, before I even put on the slides, I invest three ways. So I invest as a general partner, meaning I find the deals and structure the deals, and I'm raising money from people. And so a lot of that equity comes from cash accounts, and a lot of it comes from retirement accounts. I also invest as a passive investor, where I put in either my cash or my retirement account into other people's deals. And so just as an example, as a passive investor, one of my deals just sold, and I invested 100,000 2 years ago, and it sold, and I got 197,000 deposited in my bank account. And that was just from the sales proceeds. And then we got about 18,000 in cash flow over the past 2 years. So that was about a 9% cash return, and then nearly 100% return on our original 100,000. So that
Amazing.
that 100,000 investment, and that was totally passive.
Yeah.
That $100,000 investment returned me 18,000 in cash flow and 97,000 in sales proceeds, for a total return over 2 years of, 197 and 18 is like 115 grand. Over, 100,000 in, got 215 out. Now, that's not typical. That's a great return. It's a lot higher than what they projected. But the point is, apartments are performing amazingly well. And we're talking about the pandemic. So look, the whole world essentially came to a standstill. And certain asset classes did better than others. And apartments are one of those asset classes that did really well, and now they're doing even better. So there's a deal that I bought in Florida, Nate, not too far away from you guys. It's in Pinellas County in the Tampa Bay area.
Yeah, great area.
I bought this deal in February of 2020 for $21 million, and it's worth $30 million today. And this is through the whole pandemic.
Wow.
So unlike retail got hammered, hospitality got hammered, office space got hammered, apartments, people need a place to live, okay? And all markets are not the same. So in landlord and business friendly states, in cities where people were moving to and jobs are being created, like in Texas, like in Florida, like in Phoenix, like in Atlanta, apartments performed extremely, extremely well during the pandemic, and they're performing even better now. So let me, I have a slide deck here, but look, I'm not really just trying to stick to the slides. The slides are just meant to facilitate conversation and let you all know what's going on. You know, right now in July of 2021, as the whole United States and the rest of the world is opening back up.
Awesome.
Okay.
So, yeah, take it away. Do you have controls of your screen there?
Yeah. So, so I just went ahead and shared. This is a little background about me for those of you that have never heard of me. My first deal was a 32-unit apartment. I didn't start flipping houses or buying duplexes. And why I'm sharing that with you is that you too, with no experience, could potentially start investing in apartments. And you could either be a passive investor or you could be the person that puts the deals together. So in the last 19 years, I've done, this is outdated. I've done now 35 deals, over 6,500 units. And I actually started by going to a seminar in 2001 and hiring a mentor. And so I'm passionate about seminars and mentoring. And that's why I started in 2013 my own seminar company. And so not only do I buy deals, but me and my wife, that beautiful lady on my shoulder there in the picture, we run the country's, arguably, of course, in my opinion, but many, many others, the #1 apartment investing, education, and mentoring program in the United States. And we've helped hundreds and hundreds of people get into the apartment investing business successfully. Now, just like many of you, I had not just one degree, but I actually had 2 degrees. And that got me a job. 17 years in corporate America, 8 to 5, commuting, hard work, struggle. I got fired, I got laid off. Okay, so I was told I didn't have what it took to be successful. I was told I didn't work hard enough, I wasn't smart enough, I didn't have enough ambition. And it's ironic because I've become like a multi-millionaire apartment investor. And I'm currently in 19 deals, over 4,000 units. And recently I did the biggest deal of my life. And this deal, by the way, happened in January of 2021 in Houston. So we were still, you know, somewhat in Texas, more open than others, but we were still a little bit closed down and we weren't out of the woods with the pandemic. And yet we were able to find an A-class deal and pull together a large amount of equity. And so the message here is simple. No, you don't go and start with a $123 million deal, but there's an appetite out there for investors that want to own apartment assets. And there's a lot of equity that have been waiting for the pandemic to come to an end. And that equity is available. Okay. And many of you have that equity. And I would also ask, how many of you are more likely to invest now than you were 6 months or 12 months ago? I'm sure everybody would raise their hand. 12 months ago, people were very shy about investing. They wanted to hold on to their cash because there was so much uncertainty about the pandemic. Okay. So when we went into the pandemic, I was a huge Game of Thrones fan, and the pandemic was our economic winter, if that makes sense. It was economic winter. But here's the thing, winter doesn't last forever. Now, before the pandemic hit, we were in what I would call autumn. We were in autumn for a long time. They called it the longest economic expansion in history. It was from like 2012 to the beginning of the pandemic. And everybody was reaping the harvest. Unemployment was low, interest rates were low, occupancies were high, rent growth was high, investors were making lots of money. And then winter came. And in winter, unfortunately, a lot of people suffered during the pandemic, not just being locked down, but they suffered economically. But a lot of people didn't. There were a lot of people that, while some people froze to death, other people were out skiing and sipping hot chocolate with their friends. And by the way, if you owned apartment buildings during the pandemic and you were in the right markets, like the ones I mentioned, Florida, high growth markets, high jobs, high population growth, landlord and business friendly, you are richer today than you were 1 year ago. I know I am. I know many of my students are. So right now, ladies and gentlemen, we're in springtime again. It's exciting. You're planting the seeds for the future. And we're in the first inning of another 9-inning game. That's where I see us right now. Now, some people say, oh, that's wrong. We're waiting. We're going to have the biggest crash in history. But look, here's the deal. Whether we're in the first inning of a 9-inning game or whether there's going to be the biggest crash in history, you do not want your assets in cash. I will tell you that the people that I mentor under, these are people worth over $100 million. Some of them are close to being billionaires that are my mentors. They tell me cash is trash and you need to have your money in assets, in real assets. So check this out from Ray Dalio. Okay, look, 40% of all the dollars in circulation today were not in circulation 2 years ago. Again, 40% of every dollar was just printed within the last 2 years. So they're printing money, and that makes the value of money go down. But it makes the value of your asset go up. Okay, so that apartment building I bought last year for 21 million is worth 30 today. Part of the reason is that we rose the income and rose the occupancy. But the other part is money is worth less today than it was a year and a half ago. And we locked in our debt at yesterday's dollars. So by locking in debt in today's prices, that's another asset. So we're buying the building that's the asset, and that's going up in value. And we're buying the building, 70% of the building is being purchased with a loan, and that's locked in today's dollars. And so as they print more money, it's easier to pay off the debt. As they print more money, inflation goes up, wages go up, rents go up, the price of the assets go up. So now is the time to be in multifamily, okay? So let me just show you some updated statistics on what's going on with the economy, in case I haven't convinced you yet. As you can see on the left side, this chart, between the bottom of, say, 2010, all the way to before the pandemic, we added 22.8 million jobs. We lost 22.4 in a very short period of time when the pandemic hit. But now we've recovered 2/3 of those jobs. And you can see the hardest hit sector has been leisure and hospitality. But now as we open up the economy, travel is almost back to pre-pandemic levels. Hotels are booked to capacity. Airplanes are booked to capacity. Restaurants are open again. Those jobs are coming back. And when those jobs come back, more people are going to be looking for apartments. Okay, they're going to be looking for a place to live. So this is good news for us that are in the apartment investing business. Now, all markets are not the same. Let's look at where people are forecasted to be moving to in the next 5 years. Population growth is one of the biggest drivers for performance. So any of those cities in green circles have the highest population growth forecast. And then the yellow circles are second. So we're looking for green circles and we're looking for yellow circles. And this is where people were moving to, okay? And so now on top of that, I like to superimpose my other criteria, which is landlord and business friendly. So that's going to rule out Seattle. Sorry, Nate, if you're still there listening, Seattle is not on my list because it's not landlord and business friendly. Does that make sense? Portland, Oregon is not on my list. Okay. But Salt Lake City is, Denver is, Las Vegas is, Phoenix is, all of these Texas markets are, and a lot of the other markets that are yellow and green, virtually all of those markets are great markets to be looking at, okay? So when we look at pricing, the blue bar chart is the average price per unit, and you see it's going one direction up, and it's going to keep going up. Okay, it's not going to go back down to 30,000 a unit, just like it's never going to cost a quarter to buy a loaf of bread, especially as they print more money. Look, no politician, no president, Trump, Biden, whoever is next, they don't want to have the economy crash during their watch. They are going to keep printing money, and they are going to keep providing stimulus to keep the economy going. And as long as they can, they're going to keep interest rates low. Okay. So the asset price is going to go up, and the cap rate, which is an indication of the rate of return, you can see it's going down. The average cap rate right now is 5.1%. So how do we make money when prices are so high and cap rates are so low? Well, here's one of the ways we make money. Interest rates are really low too. So in this chart, the average cap rate is the blue line, but the average 10-year treasury rate is the orange line. And we can see right now in 2021, we're still a 360 basis point spread, which since 1990, let's see, 1, 2, 3, 4, 5, 6, there's only been 6 other times in the past 30 years that the spread between interest rate and cap rate was this high. And at the end of 2020, it was the highest, second highest in 30 years. Second highest in 30 years. So as long as that spread between cap rate and interest rate stays healthy, it's a good time to be buying, which is still right now. Okay. Now, again, all markets are not created equally. Let's look at average cap rates. Now, I like to be in markets that have above average cap rates. So any of the markets with a red circle, I generally stay away from. So one of my criteria, besides job growth, population growth, landlord and business friendly, is let's buy in a market that has an above average cap rate. So that's going to be the orange. It's going to be the yellow. It's going to be the green. Now, I don't like the dark green. I don't. That's the highest cap rate, but highest cap rate is highest risk. So generally, I like these orange and yellow markets, and to some extent, the light green. Okay, so that's where I look at with the markets. Now, let's dive into some of the details. Dallas is the #1 market forecasted for job growth the next 5 years. You got to be looking in Dallas. Houston, is the #2 market for job growth. You got to be looking in Houston. Phoenix is #3. Miami is #6. Tampa is #7. Denver's #9. Atlanta's #10. Now, the markets I skipped are not landlord and business friendly. Now, let's look at jobs. Sorry, let's look at population. Houston is the #1 city for population growth in the country right now through 2025. Dallas #2, Phoenix #4, Atlanta #5, Denver #10, Tampa #12. Are you seeing some similar markets here? Again, all markets are not created evenly. You want to invest in a market that has tailwinds, not headwinds. If you ever ran or rode a bike into the wind, how much harder it is. And so I'm trying to give you the recipe to go into a market that even you can make some missteps or some mistakes and be extremely successful. Now, how did apartments perform during the pandemic and now as we come out? Well, if we look at March 2019 to March of 2020, we could see average rents, this is nationally, across all property classes have gone up. And then between March 2020 to say June or July 2020, we could see a little dip in rents, but not a lot, just a little. And then what happened since June of 2020 until now? And by the way, look at that very tip of the right-hand corner. We could see that really starting to steeply increase. So rent growth right now in Q2 of 2021 have been virtually the highest in the last many years. So we're seeing a very sharp increase right now in rents, okay? So again, those that are in the apartment investing business right now are benefiting from massive rent growth. Now, how do we look at in each market? Let's see where the top rent growth markets are. Every one of these markets, I'm looking at the second column, forecasted rent growth for the next year. All of these markets are higher than the national average at 2.5%. Again, we see a lot of the usual suspects: Phoenix, Atlanta, Raleigh, Indianapolis, Denver, Houston, Dallas, Tampa. Okay, all markets that you want to be paying attention to. Now, if we look at occupancy between April of 2020 and February of 2021 dipped a little bit, okay? So we did see some impact in occupancy during the pandemic, but we're also starting to see occupancy tick upward again. So overall, with occupancy steady and rents going up, the values of the property have gone up. And that's why we see the price per unit going up. And the cap rate going down means there's more and more equity shifting from retail, from hotels, from office into multifamily, okay? So I've talked about a lot. I want to open it up for some questions, but I also want to give you guys a preview of something that's coming up, okay? A year from now, you're going to wish you had started today. This is so important because so many people that I know have been waiting for a crash since 2016. And they're like, Brad, we're going to wait until the crash and then get into investing in apartments. And since 2016, me and my students have collectively made like tens of millions of dollars. So here's the deal. The truth is the best time to get into apartments was yesterday. But the second truth is the second best time is now. And if you're on the sidelines waiting, you're going to regret it because there's a shortage of housing. Okay. And by the way, here's the other demographic truth. Have single family homes surged in value? Yes. It's harder for a working class family to be a homeowner. It's actually harder for them to get loans. There's higher credit requirements, and it's more affordable for them to rent an apartment. So the percentage of Americans that are owning a home is slowly dropping. And we are becoming more and more of a renter nation. So we have demographics supporting us to get into owning and investing in apartments. So our company, a little bit about our company, we have a huge mission. And I want to thank NuView for letting us share that mission. And it's really to help millions of people become financially free. And look, the best way that I've ever known how to do it is by investing in apartments. So if that sounds like something that you are interested in, I would love for you to be part of our mission. And the fact that you're here today demonstrates that you already are. So one of the things that I also wanted to talk about is, we have produced hundreds of millionaire apartment investors. And again, you can become a millionaire apartment investor in different ways. You could be a passive, or you could be the general partner, the person structuring the deals. But these are the 6 steps, okay? The steps to becoming a millionaire. You got to have the right mindset, okay? If you're thinking, I'm going to work for the next 40 years and save my money and wait for the crash and time the market and diversify my assets. Nobody ever got to the millions of dollar net worth by diversifying their assets. So you want to have the right mindset of being an investor, being a business owner. Robert Kiyosaki talks about that, ESBI, employee, self-employed on the left, business owner, investor on the right. So you want to be thinking like a business owner and an investor. So mindset is important, and I'm always working on my mindset. Mechanics are how things work, how to find deals, how to analyze deals, how to raise money, how to manage deals. You want to learn these fundamental skill sets that I call the mechanics. Number 3 is money. How do we make money with apartments? How do we buy a deal and add value? What's the business model? What's the ROI? How are we going to save money? Okay, by buying apartments. And you can save money with taxes. Okay, whether you're a cash investor, you can save money with taxes. Or if you're using your IRA, you're already having a tax deferred vehicle. Okay, markets. All markets are not created evenly. I've given you the post-pandemic world of where jobs are being created, where people were moving to, and I've articulated some of the landlord and business-friendly markets. But you really want to understand the markets and pick some markets and focus on markets and learn how to dominate just a few markets. Marketing. How do you raise money? How do you attract people to want to invest with you? If you found a $10 million deal and you need to get $3 million of equity, do you have the brand? Do you have the confidence? Do you know how to approach investors? Are you part of a community of investors that you could raise money from? Do people know who you are and what you've done and what you can do for them? So this is all about marketing. And then finally, there's the whole concept of mastery. Tony Robbins is one of my mentors, and he teaches mastery. You need to be a part of a peer group. You need to have proximity to people doing what it is that you want to do. You need to have mentors. You need to be part of a community. You need to commit to self-improvement. Tony calls it constant and never-ending improvement, CANI, CONI. And so there is a science and steps involved to becoming a master in a certain field, okay? And you could be a master in anything you want, but not everything you want. So in my life, there's probably 2 or 3 things that I'd say I'm really good at, like I'm an expert at. And one of them is investing in apartments. And the second one is mentoring and coaching and guiding other people to invest in apartments. Those are the 2 best things. Those are the 2 things in the world that I'm the best at. Okay. And so I'm an expert in those 2 things. Everything else, I'm less than an expert. Okay. So the question is, if you want to be a millionaire apartment investor or a millionaire real estate investor, these are the 6 steps. And, I have mentors like Tony Robbins and Grant Cardone. And most people are thinking get rich quick. And they think like in a very short amount of time, they could have huge accomplishments. But the reality is your huge accomplishments grow exponentially over time. So within 1 year, you could do a lot of effort and maybe not see a lot of result. But if you keep going and you don't give up, you're going to see huge result in 10 years, huge result. And I can speak to that personally. This guy's another one of my mentors. He doesn't say lower your targets. He's like, have 10 times targets and increase your actions. Okay. So I want to invite you all to learn the Millionaire Multifamily Framework, because that's what we're going to be teaching at AIM That Con. It's in July. It's coming up just in a few days. You could be there in person or you could attend virtually. And we've assembled some of the best speakers on the planet. Damon John is going to talk about, how to sell, how to pitch your deal, how to position yourself on social media. Grant Cardone is going to talk about what's going on in real estate right now and why you want to be in it. Jesse Itzler is going to talk about the millionaire mindset. And I have an amazing faculty, like you can see Kenny McElroy, Tom Wheelwright. A lot of these people are my mentors and my friends, and they are going to all teach one of those 6 steps. So mindset, mechanics, money, markets, marketing, and mastery. It's all going to happen in AIM That Con. So guys, and I want to see if there's any questions that people have about anything I've talked about. And I just want to thank you for allowing me to be here today.
Yeah, we'll take questions here in a sec. I made some notes and I just want to kind of touch on some stuff, Brad, because you said some great stuff. First of all, I love when you said locked in debt at yesterday's dollars. Doing things like that, investing yesterday, that's always something that a lot of people say. But when you look at, the state of the market and how financing is so inexpensive, even though there are higher criteria to qualify, when you look at just real estate, fee simple real estate, it's so competitive because there's no inventory and people are just scooping up property that a lot of traditional real estate investors have kind of backed off. They've got money sitting. And again, money sitting doesn't make you anything. But with multifamily, it's a lot different. And I've learned a lot of things about apartments, through some of your courses. So, and how apartment buildings can be a little bit more recession proof, even if we see these potential wave of foreclosures that are supposed to happen. There's still a need for housing, or as far as apartments go, and people need to live somewhere. And you kind of mentioned it, that a lot of people, even when you look at studies on millennials, a lot of people are choosing to rent versus trying to overpay for a house in such a competitive market. So I liked a lot of the things that you said there. And if we tie it back to IRA specifically, I mean, any of our clients are always going to be sensitive about the taxation on any level, either, tax to themselves within their IRA or outside of their IRA. And one thing that I learned from you in going to some of your courses is the additional tax benefits you get with apartments that you don't get with real estate, with cost segregation and accelerated depreciation. Do you want to talk a little bit about that? I'm not trying to take too much away from some of your courses, but that's, I think, a key item for a lot of especially self-directed IRA clients who are looking to invest passively, who are worried about things like unrelated debt finance income tax. Well, a lot of times, if your IRA is subject to tax, but you get depreciation, accelerated depreciation, it's almost a wash.
Yeah, and you're probably more qualified than me to talk about how that's handled within an SD IRA account. And that's a good point. So if you invest with an IRA, and there's depreciation allocated to all the ownerships. So whether you're a cash investor or you're an IRA investor, you're going to get your pro rata share of depreciation allocated to you. And then I guess a question back to you would be exactly how within an IRA is that handled? Does that depreciation offset your UBIT tax or your debt tax that you might be subject to?
It can. And so, and that's usually always a follow-up question, especially with our clients who've been watching our education, is they're always looking, okay, if I do an investment in multifamily or something that's going to turn my IRA into a small taxpayer, what type of tax am I looking at? Now, I will say I've always been a proponent that just because your IRA has to pay a little tax does not make it a bad investment. Obviously, I've seen some of the best investments in the world done for the fact that you're using your IRA as a capital source, but leveraging bank financing and all sorts of things. So if it's done right, bank financing, debt leveraging the investment can actually bode well, better cash on cash returns when you're injecting your IRA. But I do know with apartments, the ability to accelerate a lot of that depreciation, get you a better tax deduction, even if your IRA is subject to tax, than it would if you were just buying single family real estate. So if anybody is interested in learning more about that, I mean, consult with the CPA, but I will just tell you, in learning from Brad, in his courses, there's a lot of tax advantages you get with multifamily that you don't get with traditional fee simple real estate. So that's one thing that I wanted to mention. And one other thing, and then we'll kind of take questions, and I'll start to wrap it up here, is you mentioned something that really hit home with me too, is that the availability of new money in the system that wasn't available. And obviously that's through printing a lot of money. But if you look at the value of retirement accounts, that continues to grow. So people are still putting money toward their 401ks, toward their IRAs. Just in the last few years, I've seen the amount of retirement funds go well above $30 trillion. When I started in this business, it was in the 20s. Now it's well into the 30s. And even IRAs alone, IRAs have now taken over as the largest source of American retirement at close to $12 trillion is sitting there in retirement funds. So people are accumulating wealth in their retirement. And I think we're at a stage now where people are trying to figure out what's the best investment long-term and how can I diversify a little bit better. So apartments give a great opportunity to invest passively, but I've also seen it on the other side of it is clients taking the tax advantages they get from multifamily, offsetting their personal income through owning apartments personally, but still playing the passive role with their retirement, because you got to find an investment for your retirement anyways. And what a great investment, especially through your students. And I've even seen you personally go from a more of an active role to, now that you've got so many students finding deals, now you participate more passively in a lot of situations than maybe you did in the past.
Yeah, and I do both. So like I have a lot of earned income. So I take that earned income and it's taxable, but I put it into apartments and get a lot of tax deductions. Yeah. So that's huge. And then, from my 17 years in corporate America, I have an IRA and I use that to invest as well, because look, I know apartment buildings, and then we talked about mastery. And I would rather put my money in something that I know with people that I know than just blindly invested in the stock market. So, that's what I love to do with my IRA as well.
Yeah, and just to kind of wrap it up, and then we'll take questions for anybody who's new. When we're talking about investments in an IRA, just always remember that an IRA can invest in anything outside of life insurance contracts and collectibles. And what we specialize here at NuView is allowing clients to use their quote self-directed IRAs to invest in alternative assets like fee simple real estate, apartments, land, notes, unsecured notes, pretty much anything outside of the stock market that's a tangible asset can be owned inside of an IRA. So we hold anything basically the IRS allows outside of the two I mentioned, life insurance contracts and collectibles. I will say this, and I don't know if you know this, Brad, I pulled a quote from a Forbes article back in March 2020. And this was a Forbes article that they were reporting on self-directed IRAs and how more and more investors were leaning towards self-directed IRAs and investing in alternative assets. And one of the couple of the statistics I pulled out of that article is it said, based on IRS studies, only about 3% of all IRAs were self-directed or held alternative assets specifically. So only 3% of the $12 trillion in IRAs hold alternative assets. But when they pulled out the IRAs that were valued above $5 million, 25% of the assets in those accounts were alternative assets. So this is not a mystery to those who have large dollar IRAs, or you say, how do the rich get wealthy? Well, you see it right there based on the IRS's own studies that large value IRAs have a larger percentage of alternative assets in there than the average person when it comes to their IRA funds. So I thought that was just an interesting statistic. And the types of IRAs that we're talking about are all the accounts that you normally see anywhere else: traditional IRAs, Roth IRAs, SEP IRAs, simple IRAs. All of these accounts here can be used as a capital source to either fund apartment investments or fund other investments passively. Or you can, if you're on the other end of it, if you're looking to raise private capital for some of your own deals, these are the accounts that hold $12 trillion in them combined. And that's why we like to do this education, is just showing, because we can't tell people what to invest in. We can only tell them the accounts they can use. It's really up to our clients to find their investments. And I think Brad gave a lot of great information on why apartments might be one of the best investments out there today. And just realize that if you want to maximize your tax savings, it's by looking back, and I'll go back real quick. It's by looking back on these accounts and saying, how many of these accounts can I have? Because each one of these accounts is by definition a tax exempt trust. The more you use, the less you pay Uncle Sam. And the more you get into investments that have things like accelerated depreciation and those tax benefits, you can really, if it's done right, get Uncle Sam out of your pocket for the rest of your life. And I think that's really the key to retirement is keeping more of your money on your investments instead of giving back to your silent partner, Uncle Sam, on an annual basis. I want to end it up here and then we'll take questions. Just a reminder to anybody who's watching, we've had a lot of clients or potential clients calling in and asking about NuView. We're obviously doing a lot more online. We're beefing up our YouTube channel. We've got an education resource page. We're the #1 watch self-directed IRA education platform in the country right now. But people also don't realize we're also one of the least expensive self-directed IRA companies out there. So if you're looking to house your self-directed IRA and not get feed to death, please give us a call. Email my IRA specialist at iraspecialists@nuviewtrust.com. We'd love to talk to you, love to have a consultation with you and see how we can save you money on your fees. But also for those of you who are raising money and you're raising capital from other people's IRAs, it's probably advisable for you to look for a good home for your clients to where they're not feed to death so that they make better returns without having to give back in custodial fees. I wanted to mention this too. We have this, and this is, I know this is near and dear to your heart, Brad, because you are one of the biggest supporters to our charity, Share the Love. Share the Love is a charity that we take very, very to heart here at NuView. And if you go to our other website, or sharethелove.com, you can find information on how you can participate. I just want to throw this up there as a thank you too, because Brad, you've been a part of these events in the past and one of the biggest supporters. Anything you want to say on that before I go to the next slide?
Well, Share the Love is an amazing organization. I love being a part of it. You know, we have been to Nicaragua, Ecuador, to do some of these distribution trips. And, you know, me and Jen support it financially. And at our student events, we have, you know, raised, you know, tens of thousands or $100,000 more and match dollar for dollar. So I know that we've, you know, I don't know the final number right now, but we've helped move the needle a lot, and it's something we're really passionate about.
Yeah, it's quite a bit, and it's really moving, and I'm really looking forward to my first trip. But basically we raise money to help give wheelchairs to people who are not fortunate enough to be able to buy them on their own. And we're talking about, you know, people in countries where they just can't afford it. And it's a life-changing event to them to be able to give back and see the smiling faces of people that, you know, are stuck in bedrooms and stuck in their home because they simply don't have a wheelchair. So, and Brad and Jen are big supporters of that. So I wanted to throw that up there as a special thank you to you guys, and encourage anybody that's interested in participating, go to sharethelove.com for more information on that. And then last thing that I want to, and then we'll get to questions, is remind people that we are getting back to live events. Thank gosh. So we're going to have our first live class here in our office here in Orlando, or just north of Orlando, and it's going to be July 15th. So this is open to anybody. Please register so we could get an accurate head count, but it's going to be 6:30 p.m. Eastern time. There's our address there. And if you want more information or want to register, just go to our website, NuViewTrust.com. But we're going to be talking about everything self-directed IRAs and how to use them to fund all your real estate deals, apartments, land, everything, and anything in between. So that's an exciting thing that we've got coming up there. And obviously we've got our free promo for the month, the entire month. If you're interested in opening up your own self-directed IRA and start investing in the things that Brad talked about, or start investing in just anything that's an alternative asset, feel free to use our promo code, which is free21, and you have 0 application costs on all your self-directed IRAs for the entire month. So again, just reach out to IRA specialists at NuViewTrust.com. Let's see what we've got as far as questions go. Let's see, can you provide contact information for the folks at NuView that can help us, help me get started on the education mentorship opportunities that Brad may have? So I'll give our information, which is IRA specialists at NuViewTrust.com. Brad, do you have some special place that you want them to go to for information on your events?
Yeah, I just, so if they email support@bradsumrock.com, that'll go right to my direct team. I get the emails, my wife gets the emails. And so we could go through, we could set up a call. Obviously, they could go to bradsumrock.com and just kind of peruse our website and look at our, you know, everything we have to offer, from free training to a $97 home study to, a mastermind program and stuff like that. So bradsumrock.com, support@bradsumrock.com.
Well, and I think it's great that you guys are doing this virtually too, because I think the pandemic kind of forced all of us to look for new avenues to get people involved when we couldn't do live events. And I was real excited when Crystal Lee told me about how much you guys are doing virtually to get people involved. So yeah, you guys take advantage of that. I know if you're in Orlando or in Florida, if you can't make it out there live, it's a great opportunity to join virtually. Do you guys have an anticipated date for the following one after that, if people want to book ahead of time and go live?
Yeah, so, this coming up event in July is our National Investor Conference, where we bring in some amazing speakers. But the next training event that I'm going to do, where we go for 3 days hardcore, training, is going to be in November, and it's going to be the weekend before Thanksgiving. So I think it's like 19, 20, 21 of November, and that's going to be up on our website in just a few days.
Awesome. Awesome. Are you planning on coming in and seeing us in Florida anytime soon? I know you've got a home out here. So when do we get to see you out here?
Yeah, I would love to. Let's get each other's calendar of events, and I would love to. And I've done that in the past, and I would love to do that in the very near future. So yes.
Awesome. Awesome. So if you guys have questions outside of this for Brad, just email support@bradsumrock.com. Go to his website. I was just on there today. Great website. I was actually taking notes for our, we're revamping our website as we speak. So I was taking some notes from yours. So real slick website. That's bradsumrock.com. And Brad, I just want to thank you as a personal friend. I've known you for many years. Again, I can't endorse anybody. I'm not endorsing anybody. Believe me, I'm not. I'm just telling you what I've seen. As far as the students go, I've seen life-changing events happen through the courses. A lot of it has to do with, the education courses. But I think if you go in there with an open mind and you soak in the information, it's hard not to be successful, I would say, because it's just such a good atmosphere to be in, especially for self-directed IRA investors who are looking for a community. Because with the self-directed IRA investor, you have to be a little bit entrepreneurial. You got to force yourself to get out there and meet people. And when you've already got an established group of students that hang around, Brad, it makes it a lot easier for. So I see the life-changing events specifically for NuView clients, I would say. So thank you, Brad, for all that you do. And let's do some more stuff together, brother.
Sounds great. Thank you for having me on today.
Awesome. So again, if you guys want to post questions afterwards, this recording lives forever on our Facebook page. We also post it on YouTube. So if you've got questions and you lose the information, type it into the comment box and then we'll get right back to you. And again, thank you, Brad. Tell Jen I said hi, and we will see you. Hopefully I'll see you guys live soon in the near future.
Sounds great. And thank you. And I'm going to be on your Facebook page too. And make sure I'm there. If anybody is leaving any questions or comments, I'll be available to respond if I can access your page. Yep. I see it right now. Good deal.
Yep. Awesome. All right, guys. Well, thanks. And everybody, thanks for joining us. Have a good rest of the Wednesday.